Hey traders, Raghee here. Let's get a quick audio and video check in for our Charts and Coffee show. Happy Monday, gang. Hope everyone's doing well. All right, audio and video is good. Excellent. All right, so welcome to Charts and Coffee for Monday, December 2-1. Good to see you all. Happy Monday. All right, so let's get to it, gang. So we have, of course, a holiday affected week. Let's keep that in mind. We know that overall we're going to see dropping participation. We're going to see dropping volume. And remember that lower volume can create volatility. Volatility and high volume are not necessarily partners in crime. A lot of times that lower volatility can create a certain amount of uncertainty because there's just fewer people in the room to convince to move the markets one way or the other. So keep that in mind. Of course, going into Christmas, we have the half trading day on Thursday. And we're going to deal with the same thing going into next week. So there's a funny couple of weeks. I think it's a pretty good time to be a day trader in the morning. I like staying nimble. I like staying with the short-term time frames right now. So that's going to serve me fine. Again, first couple hours of the day. Today, it's going to be a lot of opinion, and we can already see it. Let's take a look at the intraday charts here for a moment. Now, a lot of you are probably looking at your charts Sunday night, maybe, as was I. And even though we heard that the stimulus had passed, there was a rumor, I think Sunday morning or Saturday night, that the stimulus would get passed. So there's a lot of thinking, oh, when we open up Sunday, which is back here, we're going to see the markets go higher. Now, remember, this is about a 900 million stimulus. It's been discounted into the market a nauseating amount of times since before Thanksgiving. So here we are before Christmas, and this is a number and expectations that have been priced into the market. No kidding, probably at least a dozen times. You might think we keep, as a trading public, factoring into the market the same thing over and over again. Welcome to trading. Yes. And I think this number is fairly disappointing. I think to really impress the market, we would have had to have easily been above the trillion mark and probably somewhere north of 1.5. Because remember, we weren't in the markets. When I say we, I mean, generally speaking, market participants, we're not talking about a $900 million package. It's good that it's done, extremely unimpressive and very, very tardy. So, why would the market rally on something that it's already rallied on? And so there's that. So this is very much a buy the rumor, sell the news. Add to that, what I think a lot of you probably know as well, is that we're seeing travel restrictions abroad. We're seeing the UK in a fresh round of shutdowns. We're seeing a particularly virulent spread of coronavirus over there. And the markets are freaking out. And so you add the buy the rumor, sell the news. Yeah, sorry, 900 billion. Yeah, sorry. Pip chick, million, billion. Is it even real money anymore? Thank you. We were looking for 900 billion. Yeah, 900 billion. So they've got a particularly, exactly, Rapid IT, and thank you, Pip chick. 900 billion, million. I feel like, what is it? Austin Powers quadrillion. Yeah, can we just call it 9 quadrillion? Because, yeah, exactly. 900 quadrillion. You guys remember that scene in The Social Network? Have you guys ever seen The Social Network? And there's a scene where Justin Timberlake plays Sean, what's his name? Who was one of the early investors. And he looks at Zucks and says, what's cooler than a million? A billion. So, oh my gosh. Well, yes, we have a lot of very disappointing news. Well, downright scary. And then a buy the rumor, sell the news in terms of the stimulus package. So you see that dip through the Sunday Open, into the European Open, into the UK Open. And one thing I will tell you all, take a look right here. 4 a.m. You might think, what the heck's going on at 4 a.m.? Sadly, I was up. However, see that right there? That is the Asian close. Look at that. So when Asia was closing, think Auckland, Sydney, Tokyo, Hong Kong, Singapore. When that part of the world, that turnover, that trading time was winding down, they weren't buying. So I think when certain rallies and sell-offs happen is as important as from where or the fact that they did happen. So think about time in the markets. And we brought this up before. The markets are four-dimensional place. We talk about price, of course, and unfortunately, a lot of people stop there. We want to think about volume. We want to think about volatility. So we have volume, we have volatility, and then we have time. And I think probably in this order, interestingly enough, folks do focus on this. Some focus on this, even fewer focus on this, and almost nobody focuses on that. So if you remember that we're in a 4D environment and we're not just measuring price, but we're measuring time as well, in addition to volume and volatility, you're going to have a pretty good idea of what's going on. By the way, I had a lot of questions about volatility from last week. And one of the things that I mentioned on options expiration Friday, other than that rip higher that we saw at the very end of the day, okay, the day was not that volatile. So again, I think a lot of folks were caught on the wrong side of this because they forgot that this was a caution day. Now, if you're wondering what that is, you can check out the Simpler Trading YouTube channel for my free video from Friday. And I describe what a caution day is. We have these all the time, and why this kind of more unpredictable action is not something that should catch anybody by surprise. The day was actually not volatile at all when you think about volatility as a measure of historical price movement probabilities. The very end of the day, that was it. Around 3:30, this movement here, based on an indicator that I created based on some calculations that some dear friends of mine created many years ago, the very last part of the day, yes, there's some volatility, but the rest of the day was actually really sedate. So then you might ask, well, Rog, where are we today? Where are we in terms of volatility? It's already quite volatile. We'll see what happens after the bell, but we're already looking at a market that after the 4 a.m. Asian close, right now it's kind of gone quiet, but this market's already sort of been rocked a little bit. So keep that in mind as we inherit that psychology at 9:30. All right, so let's go ahead and grab some questions. All right. So yes, feel free to drop some questions in. We'll do that right now. So am I short the market? Let's take a look at the daily time frames. All right. So market does one of these. Okay. I think a lot of folks have been waiting for a pullback. I am not a fan of guessing where the tops are, right? I mean, which candle do you pick, right? A lot of folks have been asking me, is the market ready for a pullback? Market can be ready for a pullback at any time, right? I think healthy trends correct. So what I'm looking at is whether or not this can be a potential buy. So there's two ways of looking at markets like this. Is there a potential for a pullback? Uptrends pull back. This is still very much an uptrend. Am I going to short this market? The only way right now in a double green uptrend, now think about probabilities, gang. If you wake up every morning bearish, and a lot of folks have been bearish for probably since early last week for any number of market internals, today, if you were in the market, you might have an opportunity to go ahead and take some profit. That's fine. And that's a less frequent occurrence, and I'm going to put that in the lower probability occurrence bucket, if you will. What's worked better is, well, are we going to see higher highs? That's been highly probable. Are we going to see pullbacks? Yes. Are we going to buy those pullbacks? Again, yes. So think about the higher probability direction. Not can I pick a top, buy some puts, and take advantage of a day like today. Some folks did, and that's great for them. But here's the thing to remember. How many times did you do it? How many times did you put on a short trying to pick a top until it finally happened? Because there's a cost to that. There's a cost to it, of course, financially, but there's a cost to it emotionally as well, right? You can only go up to the plate take a swing and a miss before your confidence starts to erode. So I'm still very much bullish, and I'm not interested in a short of this market. I'd rather be flat. I'm still very bullish. It served me to be very bullish. Take a look at the S&P, gang. This is 2020. Take a look at this whole chart here. And I'm going to remove the comment here. I think I can. And let me just find something short here to get there we go. And yes, good morning. See how this is mostly green along the bottom? The path of least resistance for most of the year has been up. Put that pullback in context. This is an opportunity for me, gang. I may not buy today, but I'm going to start looking for opportunities to get long. And by the way, this is a gap down. So as a day trader, I'm looking for certain fade buys on the morning. All right. So I see a move like this, and it's really good for context to squeeze in a year and look at just the scale of the move. Because, of course, remember, financial media is all about hyperbole. Financial media is all about tapping into the lizard brain and freaking you out, keeping your attention. They're never going to have measured, balanced. It just doesn't suit them, right? It doesn't suit their purposes, which is to keep you tuned in so their advertisers can feed you their message. That's it. That's it. I don't know why people sometimes think that somehow financial media is a public service announcement. No, right? I am no sooner going to watch ESPN to become a world-class quarterback than I'm going to watch any one of those financial channels to become a world-class trader, right? Okay, so remember what their job is. Tesla, sure. Big day for Tesla. It's a big day for Tesla. It's not as important for the index, but it's a big day for Tesla. So one of the questions that we've been talking about for a few weeks in our Charts and Coffee show has been, what benefit does the S&P have to Tesla being added? And I said initially, nothing. There's not really going to be any big Tesla rally in the S&P, because remember, this is far more bullish for Tesla than it is for the S&P. It'll be bullish for the S&P eventually, potentially, if Tesla continues to rally and its weighting is considerable. In the beginning, it's more about the different money managers and ETFs and indices and all the folks that are using the S&P as a benchmark to add Tesla into their portfolio. So therefore, it's a very, very bullish event for Tesla, but it doesn't work the other way around quite yet. Okay. And, I've been talking a lot about dips and bullishness and double green environments gang. Let's talk about this environment again, right in here. Double green environments are especially powerful for traders who are dip buyers, which is what I'd consider myself for the most part, trend following dip buying, or if you're a momentum style trader. Are there times where we're breaking through certain levels, whether they be Darvis like I have here, or whether they be volume derived like a volume profile level, value area highs, etc.? Are there going to be certain events, certain environments that are better for that? Double green, gang. It's interesting that the same environment that's very good for pullback buyers is exceptional and really required for momentum breakout buyers. So keep that in mind. Double green serves the most people. In fact, on Sunday, for those of you that are part of my Sector Secrets Mastery, you got a couple alerts from me yesterday. And one of them, this is while let's see, what was the game that I was watching? The Chiefs and the Saints, which was actually a really pretty good back and forth game. And what am I doing? I'm working on which sectors and which stocks are double green, because that's going to be the most productive and powerful watch list for us. Start with a good watch list. What you trade is even more important than how you trade it. As long as you get the watch list right and the direction right, it's amazing the margin of error that you will have for your trading. Okay, so that's Tesla. It's going to continue to be in an environment where it's bullish on the narrative, and it's structurally bullish as well. Yeah. Okay, so yeah, a lot of things the market's concerned about in terms of buy the rumor, sell the news, and the stimulus, and certainly what's happening in the UK is pretty terrifying. All right, so Let's see, what else do we have here? SMH. No, I love the question. And Lewis, yeah. SMH. SMH for me did, well, let me show you here. Let's go to the daily time frame of SMH. All right, so what do we have here? Double green, gang, double green. Daily time frame, SMH, heading higher. And what this tells me is that this is the kind of market that even when we do have a pullback, we're looking for resiliency, aren't we? We're looking for resiliency in that when the markets do pull back and temporary narratives create panic, panic within a double green is a retracement. Retracements are opportunities. And so I'm looking for where, even after the dust is settled, let's face it, that's the kind of event we're dealing with right now. Is anyone going to look at things like SMH, CLOU? Think about who's going to benefit again on a day like today. Go look at your work from home stocks, gang. Go look at your work from home stocks. Look at those names that tend to do well. They might pull back because the tide's going out, right? Fear means S&P, NASDAQ, Dow, the tides are going out in those markets. But then you ask yourself, when people settle down and they start to look at the market with this new narrative discounted, and they say to themselves, wow, we probably didn't want to sell cloud computing. We probably didn't want to sell semiconductors. We probably did not want to sell those work from home stocks because, well, if UK is sort of a harbinger for what's to come, pretty terrifying and really good for those companies. I'm not saying today's the kind of day I run out and buy Peloton, but I sure would love to see a pullback before I think about it. And if I'm able to see that, then, so I'm just giving you kind of an example of what I believe will be a really good way to look at this market. If the market really does panic, look at where the resilience is going to be. So take a look at MU. Now, where did I come up with that? Because when you start taking a look at certain stocks like MU, there we go. MU, AMAT, are they double green? Do they have the kind of structure that I feel comfortable taking advantage of? And then in addition, the next step, and this is very much at the heart of the way we build watch lists and Sector Secrets Mastery. Gang, we spend an inordinate amount of time on what to trade, even when I'm trading in the futures room, what to trade. A lot of folks just sort of have this chiseled in stone watch list of things that they want to trade that have rewarded them in the past, or they're just simply in the headlines. Spend more time on your watch list, gang. Actually, if you're spending 20% of your time on your watch list, try spending 80. And if you're spending 80% of your time trading, spend that on your watch list, right? Pareto's principle really does apply, that 80-20 rule, which actually happens to be a very good book as well. But flip that around and see if it doesn't improve your trading. And I can nearly bet, because I've given this advice to many traders, it will. Focus on what you're trading first, then focus on what you're going to do with that symbol. So when you look at something like AMAT, then you're asking yourself, well, is it in that group in terms of passive investing? Is it in that group that could benefit? Well, AMAT is 5.5% of the SMH. So it's in the right group, right? I love that group, SMH. And, the other way we can look at this here is like that. And pull up that view on the multi-chart. And this is a double green sector with a lot of double green stocks. Remember, SMH also includes a number of other names that are going to move like AMAT, and there's your MU. So to your point, and Lewis, yeah, I like it a lot. And if I don't get a pullback on an individual double green name within SMH, I'm perfectly fine with buying the overall tide, right? Votes tide. Okay, so great question. That's exactly where we want to think. Let me tackle Jets here really quick, and then we're going to wrap it up. And so the question about Jets is, well, they just had their first win, New York Jets. So let's take a look at the Jets here. Jets ETF, not the Jets football team. And yes, the overall sector is double green. We'll probably see pullbacks with the travel restrictions. So this might be a potential opportunity. Now, here's what'll be a little tricky. In a situation like this, that's especially sensitive to travel, play the sector, the tide, if at all possible, rather than making a bet on an individual boat, right? Bet on all of them, diluting, placing a small bet on lots of the names associated with Jets rather than picking, say, Dow or Save or American. I would go a little wider, not deep, with the approach to a name that's going to be so sensitive to potential concerns about this domino effect of travel restrictions and lockdowns. All right, gang. So with that being said, I am straight up out of time. It's 20 after, so I will see you all. And yes, just to kind of wrap it up, to reiterate, yes, there is gap psychology this morning. Be a little careful. Think about the week that it is. Think about what the market is actually discounting right now. Yes, there's a potential fade, but be very selective about where you want to start putting your money to work. It may not, right now, broader indices may not be the way you want to focus. You might want to focus on individual sectors like we spoke about, and even potentially individual relative outperforming double green stocks. Okay. All right, gang. I'll see you in the options room later on at 12:30. I'm going to head on over to the futures room and the different simpler rooms I'm in. If you're not familiar with that and you're brand new to my work, check out, it's a free newsletter, countdowntrader.com. It's my Countdown Trader newsletter. It's a good way to get familiar with the kind of things that I'm looking at week in and week out. If not, I'll see you all in the rooms later on. Be good to each other, gang. I'll see you tomorrow.